Hey, everyone! Welcome back to the channel. Today we're diving into a super exciting topic that can change the way you think about building wealth, investing in real estate through crowdfunding. Now, I know what you're thinking. Real estate? That sounds expensive, right? Well, not with this method. You don't need to be a millionaire to get started, and you don't even need to deal with the headaches of managing properties yourself. In this video, you'll acquire the wisdom on how to invest in real estate with crowdfunding. I'll break down how you can invest small amounts of money alongside other investors, giving you access to big real estate opportunities. Whether you're new to the idea or already familiar with crowdfunding, by the end of this video, you'll have a clear understanding of how to get started and the strategies that will help you succeed. And don't worry, we're not just talking theory here. I'm going to show you exactly how this works and how it could work for you. Are you ready? Subscribe to the channel and let's get started. Let's start with the basics. Real estate crowdfunding is a method of pooling funds from multiple investors to invest in a real estate project. Instead of needing hundreds of thousands or millions of dollars to purchase a property outright, crowdfunding allows you to invest small amounts alongside other investors. Think of it like this. If buying a building was like buying a pizza, traditional real estate investment is you buying the whole pie. But with crowdfunding, you're just buying a slice, maybe even just a bite. You and a group of investors share the costs and profits, but you don't have to worry about the day-to-day management of the property. Sounds pretty good, right? Coming up, we'll talk about why more and more investors are getting excited about real estate crowdfunding. Spoiler alert, it's not just about the money. Now let's get to the heart of it. Why are so many people flocking to real estate crowdfunding? First, it's important to understand who benefits from crowdfunding. Crowdfunding was initially a game changer for startups, offering them a valuable source of capital that they might not have been able to get from traditional funding sources like banks or venture capitalists. It opened doors for businesses that had great ideas but lacked the financial backing to bring them to life. Today, this same principle applies to real estate. Small-time investors can pool their resources to fund large real estate projects they otherwise would never have been able to participate in. So, who benefits from crowdfunding? Interestingly, statistics show that the primary supporters of crowdfunding campaigns across platforms like Kickstarter, Indiegogo, and now real estate crowdfunding are predominantly men, particularly aged 25 to 45. This demographic is historically the most likely to back campaigns, likely because this age group is often looking to build wealth, take investment risks, and leverage innovative financial tools to secure their financial future. Why are these investors flocking to real estate crowdfunding? First, it provides an affordable entry point. You don't need a six-figure budget to get in. With as little as a few $100s, you can become a part owner in real estate projects that would otherwise be out of reach. Second, diversification. Crowdfunding allows you to spread your investment across different properties, markets, and even countries, which minimizes risk compared to sinking all your money into a single property. Third, passive income. This is a huge draw. Once you've invested, you don't need to worry about tenant calls, maintenance issues, or the day-to-day management of the property. Your money works for you. And lastly, access to larger projects. Real estate crowdfunding offers access to high-value commercial projects that individual investors typically couldn't afford or wouldn't have the connections to invest in. This opens up opportunities for higher returns. However, it's worth mentioning that real estate crowdfunding attracts a variety of investors looking for more flexibility. Whether they're seasoned real estate pros or beginners looking to dip their toes into property investment, the appeal lies in having a diverse portfolio without the hassle of managing properties themselves. But there's more. Stick around, because in the next section, we're going to demystify how real estate crowdfunding actually works. And trust me, it's simpler than you think. All right, let's break down how this whole thing works. Imagine a property developer who wants to build an apartment complex. They've already lined up the project, but they need additional funds to complete it. Instead of going to just one wealthy investor or taking out a big loan, they reach out to a crowdfunding platform. This platform allows multiple investors, people like you, to invest smaller amounts. Once the project is complete and profitable, you earn a return on your investment based on how much you contributed. It's kind of like a Kickstarter campaign, but for real estate. If you've ever backed a project, you know you're chipping in for a cause and expect something in return. Here, though, what you get back isn't a fancy gadget or a limited edition product. You're getting cash flow, rent, property appreciation, or sometimes both. It's a great way to earn passive income without the hassle of managing a property yourself. Speaking of passive income, if you want a video on passive income, ideas that can generate good income this year and next, comment video below to let me know. I'd love to create more content around different strategies for building income streams. And the best part? You don't need to live in the US to benefit from this. In fact, in the next section, we're going to show you how to invest in real estate crowdfunding no matter where you are in the world. Now that we've laid the groundwork, let's talk about how to invest in real estate with crowdfunding. Whether you're in the United States or halfway across the globe, this strategy can work for you. First, the beauty of real estate crowdfunding is that it's accessible worldwide. Many platforms allow international investors to get involved, as long as they meet certain criteria. You might need to have a minimum net worth or income level to qualify, but it's still far more accessible than buying a property outright. If you don't live in the United States, here's the good news. There are platforms tailored for non-US investors, such as Estate Guru in Europe or BrickX in Australia. These platforms make it easy to invest in properties without stepping foot in the country. All you need is an internet connection, a little research on the platform, and of course, the funds to invest. It's real estate investing simplified. Let me share a personal story with you. Back when I was in college, one of my professors pitched us an idea that seemed, well, unusual at the time. She didn't have much money, but was convinced her idea had massive potential. She said, "Why don't we pool together to build or rent a space for warehouses where people can store their seasonal items, winter clothes, equipment, or even goods?" We all stared at each other like, what is she even talking about? We were students. We were only interested in studying, not investing in some warehouse business, but she kept insisting, this is the business of the future. Fast forward to today, and guess what? She was absolutely right. The city where I grew up is now filled with these storage businesses. Back then they didn't exist, but now they're everywhere. You probably see them in your city too. And if you don't, well, that could be a great business opportunity for you. What's even more amazing is how automated these businesses have become. People can rent space using just their smartphones. No need for physical keys or contracts. Everything's done digitally, from security codes to payments. It's an incredibly low-maintenance business model. Looking back, I wish I had the money to join her at the time. But like many people, I thought, this is a business for the rich. I convinced myself that it wasn't for me, and yet, here we are. Her business idea wasn't just for the wealthy. It was for anyone with the vision to invest smartly, even on a small scale. And that's exactly what real estate crowdfunding offers you. You don't need to buy the entire property. You just need a small piece of the action to start building your wealth. Now, if you're wondering how crowdfunding compares to traditional real estate acquisition, stay tuned because we're about to dive into that next. So, how does real estate crowdfunding stack up against the old-fashioned way of buying property? Let's break it down. For starters, traditional real estate acquisition often requires a large sum of money up front. You're looking at a substantial down payment, closing costs, and don't forget the ongoing expenses like property maintenance, taxes, and property management. Depending on the market, buying even a modest property could set you back by hundreds of thousands of dollars. For most people, this kind of financial commitment is a serious barrier to entry. But with real estate crowdfunding, you don't need that kind of cash to get started. In fact, one of the biggest advantages of crowdfunding is how affordable it is compared to traditional real estate investment. Platforms like Fundrise or Realty Mogul allow you to start with as little as $500. That's right, just $500 can open the door to your very first real estate investment. Other platforms might have higher minimums, ranging anywhere from $1,000 to $5,000, but it's still far more accessible than coming up with a down payment for an entire property. So, how does this work? Think of it as buying a slice of a much larger pie. Instead of purchasing the whole property, you're buying a small stake in a larger real estate project alongside other investors. This allows you to get in on high-value commercial projects, residential developments, or even income-generating properties without having to foot the entire bill. How much money do you really need? Let's dive a bit deeper into the specifics. The minimum investment required depends on the platform you choose, but here's a breakdown of some popular options. First, Fundrise. You can start with as little as $500. Fundrise is known for being beginner-friendly, offering opportunities to invest in residential and commercial real estate. Second, Realty Mogul. Their minimum investment is typically around $5,000, making it suitable for those who want to invest a bit more. This platform offers more curated deals, often focused on larger commercial properties. Third, CrowdStreet. If you're a more experienced investor and qualify as an accredited investor, you might need $10,000 or more to invest here. However, CrowdStreet deals in high-end commercial real estate, which can potentially lead to higher returns. And lastly, Estate Guru. For those based in Europe, platforms like Estate Guru allow you to start with as little as €50, making it one of the most affordable options in the market. So whether you're starting with $500 or $10,000, there's a real estate crowdfunding platform that fits your budget. The key here is accessibility. You don't need to be a millionaire to start investing in real estate. Crowdfunding allows you to start small and grow your portfolio over time. This low entry point removes a significant barrier for beginner investors. In traditional real estate, you'd be saving for years, sometimes decades, to gather enough for a down payment on a property. With crowdfunding, you can start right now with what you have. That means you can begin building wealth sooner, without waiting until you've accumulated a large sum of money. Plus, the lower financial commitment also means less risk. If one project doesn't perform as well as expected, you haven't put your entire life savings on the line. You can diversify across multiple properties or platforms, reducing your exposure to risk while still benefiting from the potential upside. Another thing to emphasize is how crowdfunding makes real estate investment more inclusive. Traditionally, real estate was a game for the wealthy, a world where only those with significant capital could play. Crowdfunding has democratized access, allowing everyday people to invest in real estate. Whether you're a college student with a little bit of extra cash or a seasoned professional looking to diversify, real estate crowdfunding makes it possible for anyone to build wealth through property. In summary, Traditional real estate acquisition gives you full control of your property, but it comes with hefty upfront costs, ongoing responsibilities, and a much higher level of risk. Crowdfunding, on the other hand, allows you to invest smaller amounts of money, diversify your portfolio, and avoid the day-to-day stress of managing a property. So if you've got $500 sitting in your account and you're wondering how to get into the real estate game, crowdfunding could be your ticket in. It's accessible, affordable, and opens up opportunities that were once reserved for high net worth individuals. But how do you make sure you're a successful real estate crowdfunding investor? We've got that covered next. Plus, we'll take a look at a famous success story to inspire you. Being successful in real estate crowdfunding comes down to three things: research, patience, and diversification. First, you've got to do your homework. Not all crowdfunding platforms are created equal, and not all real estate projects will yield the same returns. Look into the platform's track record, the types of properties they offer, and the fees they charge. Second, be patient. Real estate isn't a get-rich-quick scheme, and crowdfunding is no different. It could take years to see significant returns. Third, diversify your investments. Don't just put all your money into one project. Spread it across different property types, residential, commercial, and even international properties if possible. Take inspiration from Grant Cardone, a real estate mogul who didn't start with millions, but worked his way up through smart real estate investments, including crowdfunding projects. His success shows that anyone with the right mindset and strategy can make it in this space. We're getting close to the final stretch, but before we wrap up, let's weigh the pros and cons of real estate crowdfunding. So, is real estate crowdfunding the golden ticket to wealth? Let's weigh the pros and cons, but more importantly, let's talk about what you need to watch out for as an investor. Let's talk about the pros of crowdfunding. Real estate. As mentioned earlier, crowdfunding offers lower entry costs. You don't need to be a millionaire to get started. You can start with a small amount of money. This makes real estate investing accessible to almost anyone. Second, passive income. One of the major appeals of real estate crowdfunding is that it's a passive investment. You don't have to deal with the stress of being a landlord. No tenant calls at 2 a.m. about a broken pipe or late rent. The property management is handled by professionals, so you can sit back and let your money work for you. Third, diversification. Crowdfunding allows you to spread your investments across multiple projects, regions, and property types. This is great for minimizing risk. If one project underperforms, your other investments can balance out your portfolio. Now, let's talk about the cons of crowdfunding real estate. First, lack of control. You're not the one making day-to-day decisions about the property. The project developer or platform manages the investment, so you're trusting them to make smart choices. If you're someone who prefers a hands-on approach, this might feel uncomfortable. Second, like all investments, there's a chance the project could fail. Real estate markets can be unpredictable, and certain factors like economic downturns or project delays can affect returns. It's important to remember that there are no guarantees, and you could lose some or all of your investment. And lastly, illiquidity. One of the biggest drawbacks of real estate crowdfunding is the lack of liquidity. Once you invest in a project, your money is typically locked in for several years. Unlike stocks or REITs, which you can buy and sell easily, crowdfunded real estate investments aren't something you can exit quickly if you need cash. All right, now let's talk about what to watch out for as an investor. While the pros are compelling, There are some key things to watch out for as an investor in real estate crowdfunding. First, platform credibility and fees. Not all crowdfunding platforms are created equal. Before you invest, make sure to thoroughly research the platform. Look into their track record. How long have they been around? What types of projects do they typically fund? Read reviews from other investors and make sure the platform has a good reputation. Also, pay close attention to the fees. Some platforms charge management or performance fees, which can eat into your returns. Compare different platforms to see which offers the best balance between low fees and high-quality investment opportunities. Second, project developer experience. The success of your investment largely depends on the experience and reputation of the project developer. Research their past projects. Did they deliver on time and on budget? Did they meet or exceed return expectations? A developer with a poor track record or little experience can increase the risk of the project failing or underperforming. Third, project type and location. Consider the type of property you're investing in. Is it a commercial building, residential development, or mixed-use project? Some property types, like commercial real estate, can be more volatile during economic downturns. Additionally, pay attention to location. Real estate markets vary greatly by region, and investing in a high-growth area can make a big difference in your returns. Next, illiquidity and exit strategy. As mentioned earlier, real estate crowdfunding investments are illiquid. Make sure you understand how long your money will be tied up. Some projects may lock in your investment for several years, with little flexibility to exit early. Review the platform's exit strategy. Some might offer secondary markets, where you can sell your stake to other investors, but this is not always guaranteed. The next, regulatory and legal risks. Real estate crowdfunding is still a relatively new investment model, and different countries have different regulations regarding it. Make sure the platform complies with the local laws in the country where the property is located. Also, understand the tax implications of your investment. Real estate investments often come with their own set of taxes, which can vary depending on the country or region. Moving forward, the projected returns versus reality. Be wary of platforms that promise high returns without clearly explaining the risks. While the potential for profit in real estate crowdfunding is real, always approach these opportunities with a healthy dose of skepticism. Look at past performance, but remember that past success doesn't guarantee future results. Next, economic and market volatility. Real estate is a market that can be influenced by broader economic trends. Recessions, interest rate fluctuations, and market crashes can significantly affect property values and returns. If you're investing in a crowd-funded project during a volatile period, understand that your returns may take a hit or be delayed. And finally, alignment of interests. Ensure that the platform or developer's interests are aligned with yours. Look for structures where the developer only profits when you profit, meaning their fees are tied to the performance of the project rather than being upfront. This ensures that everyone has a vested interest in the success of the project. Now that you know what to watch out for, let's discuss if real estate crowdfunding pays dividends and give you the bottom line on whether real estate crowdfunding is the right move for you. One of the big questions many investors have is whether real estate crowdfunding pays dividends, and the answer is, it depends on the project and the platform. In many cases, yes, real estate crowdfunding can provide investors with regular income through dividends. These dividends typically come from rental income generated by the property. If the property is occupied and generating cash flow, that income is distributed to investors in the form of dividends or regular payouts. The frequency of these payouts can vary. Some platforms offer monthly, quarterly, or annual distributions, depending on the type of investment. However, it's important to understand that not all crowdfunding projects are structured to pay dividends. Some projects focus on property appreciation, meaning the returns are realized when the property is sold or refinanced, which could take years. These projects don't offer regular payouts during the investment period, but aim for a larger payout at the end. So if you're looking for dividend income, make sure to carefully read the details of the investment before committing. Look for projects that are cash flow positive, meaning the property is generating enough rental income to cover expenses and still provide dividends to investors. Now that we've covered dividends, let's get to the final point. What's the bottom line with real estate crowdfunding? Should you dive in? Stick around for the conclusion. So, what's the bottom line? Real estate crowdfunding is a great way to get involved in the real estate market without the need for large upfront capital. It's accessible, allows for diversification, and provides a passive way to generate income. But, like all investments, it comes with risks, and it's crucial to be informed before diving in. And there you have it, folks. Today we've covered how to invest in real estate with crowdfunding. Remember, wealth isn't built overnight, and real estate crowdfunding is no exception. But with the right strategy, patience, and mindset, it can be an incredibly rewarding investment tool. As we conclude, it's important to note that this video is meant to educate you on the various aspects of investing, not to provide specific investment advice. Investing involves risks, and you should always do your own research and consult with professionals before making any financial decisions. Past performance doesn't guarantee future results, so always consider the risks involved. If you found this video helpful, I highly recommend checking out my next video, which complements this one perfectly. Don't hesitate to share this video. It might help someone else, too. Subscribe to the channel and drop a comment below with the biggest money struggle you faced and how you plan to overcome it. We'd love to hear your stories. Until next time, keep your mindset sharp, your strategy smart, and your money will start to obey. Thanks for watching. Until next time, happy investment.